talk about Kevin Warsh. Masterful performance yesterday. If you ask me, we got Conrad DeQuadros, Citi Wealth Head of Economics. And we got David Bahnsen, founder and managing partner of the Bahnsen Group. Gentlemen, welcome. Conrad, one of the things I loved about what Warsh said yesterday, and by the way, I thought it was masterful. You could see the business professor right there at the lectern. I think he used one index card, and that was it. But he's saying, you know, these numbers come out. Good news should be good news. It shouldn't be that they have to figure out what the Fed is going to do about the number. It's the number itself, presuming that the number is any good. Now, I thought, you know, ending forward guidance like that is a very good thing, and he laid it right out yesterday.
I think he did a fabulous job, and I agree with him that it's better for the markets to just make a determination based on the data rather than make a determination how you think other people are going to respond to the data. And so I think it's a much cleaner way for the markets. I think that's what the Fed should be doing. I believe that the issue with forward guidance is that Kevin Warsh doesn't want to try to tell markets and the public things that they don't really know. And so, you know, there's no forward guidance in the policy statement. You know, interestingly, all the voters went along with that. So there was agreement. He was able to get agreement on that. And I think he did a fabulous job.
They've been so bad for the last years in their forecast, and they haven't hit their inflation target in 5 years under Jay Powell. David Bahnsen, the other thing is, dear to our heart, inflation, low inflation and strong economic growth and low unemployment can coexist. The Phillips curve is dead. Long live the Phillips curve.
Yeah, who would have thought it, as if the 1970s didn't already teach us this valuable lesson. He understands that. It's one of the things I've loved about Kevin as long as I've known him. He is no Phillips curver, but I think what Conrad said is so true. Not only do we want markets to focus on the data because it's cleaner, it's more productive. You get business actors and investors just doing things that are more natural and healthy for the supply side of the economy when they're not trying to constantly front run the Fed or game the Fed or figure out Fed reaction. Kevin has a big thing against the reaction function that's been part of monetary policy for several Fed chairmen now.
Yes, I think it's a refreshing breath of fresh air. Conrad, they're still talking about the Fed has to, because of the dot plot, which, by the way, Warsh didn't even participate. He didn't put his own dot. Good for him. Hopefully others will join him. Why should if the Fed could raise rates if they're worried about oil prices several months ago? But the whole thing's changed now. Oil prices come crashing down. $75 is where it was a year ago, believe it or not. And gasoline prices going to follow suit. So I can see them standing pat for a bit, but why should they raise their target rate?
Well, you know, there's a couple of points I would make. First, going back to the dot plot and the potential changes to the dot plot. This is something that the Fed has been discussing for many years. And now we have Kevin Warsh who's saying he's actually going to do it. So I think that that's important. I think the Fed has recognized that there were problems with the dot plot, and I think that those are now going to be addressed. Now, with respect to a rate hike, our view is not that the Fed will be hiking rates. We look at the real economy is doing great. Right? We keep getting data that are beating expectations, whether it's payrolls, retail sales, industrial production, all coming in very strong. The economy is very resilient. Kevin Warsh is not going to hike rates to slow the economy because I agree with you, and I think that he does too, that strong growth does not mean higher inflation. Inflation is about the stance of monetary policy. Now we do have high inflation. It's not entirely an energy price story, and I think that that's something that they're watching very closely, and we'll continue to watch over the course of the year.
David, you know, one of the things Kevin watches is commodities, okay? I wouldn't say he's a strict commodity price rule, but he does keep an eye on commodity. He also keeps an eye on the monetary aggregates. But all the commodities now, as oil comes down, you see big declines in gold and silver. And also, this was pointed out to me on the radio show by farm commodities are coming way down. Corn's way down. Wheat is way down. The only thing that's up is Dr. Copper because the economy is strong. But, I mean, commodity prices are sagging. Precious metals are sagging. I mean, there's no reason why the Fed should raise rates right now. I guess that's where I'm going with this.
Yeah, and I think there's an argument that there's a lot of reasons not to, that the long end with mortgage rates are problematic. We need more affordability on the housing side, which has a lot of connectivity to other parts of the economy. I agree. It would be Phillips Curvers who would want to raise rates because they're worried about growth becoming inflationary. I do think there's some stickiness in certain parts, goods inflation, other things you want to watch, but those aren't rate sensitive, Larry. That's the point that Kevin understands. You get sort of idiosyncratic things with certain commodity prices, but they're not a matter of too much money supply, easy money driving inflation. Kevin gets that.
It's not too much money chasing too few goods right now. Okay, it's just not. And he knows that. That's the good thing. I mean, teaching business school at Stanford all these years, you could see him up there on the podium. He was in full command. I mean, it was really a sight to behold. And his policy statements, very consistent with his confirmation, and as I said, a breath of fresh air.
Yeah, I think so. I mean, I think we knew that he was going to be a chair of change. I was encouraged to see and hear that it seems like the committee as a whole, because it's still a committee-led institution, seems to be open to that change. I think they're recognizing, you mentioned they have made some mistakes. A very big mistake they made was in 2022 when they ignored the inflation problem that we were seeing back then. And I think they're going to learn from that, and I think that's encouraging.
He's going to be a great leader at the Fed. Terrific stuff. Conrad DeQuadros, thank you. Great. You'll come back, right? Right here on set. And my pal David Bahnsen, he's out with the beautiful people in Long Island, but I know he's going to come back on set someday.